Australia's economy is slowing down faster than expected, missing expectations and sending the local currency to a 6-year low.
SBS Finance editor Ricardo Goncalves joins us now with all the details. Ricardo, what do the numbers say about the economy?
Well, Janice, it depends on how you want to read it. There is no denying GDP is being squeezed, with economic growth slowing to 0.2% in the June quarter, worse than expected. For the year, our economy expanded 2%, but that is below trend. When you look at it on an annual basis, that makes it 24 years of consecutive economic growth, and that's a feat only surpassed by the Netherlands, which experienced 26 years of expansion between 1982 and 2008. Here is Treasurer Joe Hockey.
At a time when other commodity-based economies like Canada and Brazil are in recession, the Australian economy is continuing to grow at a rate that meets and sometimes beats our most recent budget forecasts.
Now, reduced mining and construction activity along with a decline in exports were a drag on the economy, although the financial, transport and health industries added to growth. There were other positive contributors, and here's Shadow Treasurer Chris Bowen.
In fact, government spending made a positive contribution, and clearly without increased government spending, this quarter would have been negative in terms of economic growth.
So as a result, our share market finished in the black, recovering from early falls. A better day on the Chinese share market helped sentiment, but take a look at the Australian dollar. Weaker again today. Our dollar really has been hit in recent months. Remember the days when the Aussie was above $1, peaking back in 2011? Overseas holidays were cheap. Shoppers flocked to the internet to buy from international retailers. Well, bad news, those days are well and truly gone. Our currency has weakened dramatically since 2003, and overnight it hit a 6-year low below 70 US cents. The economic growth numbers didn't help. It hit a low of 69.82 US cents at one stage. So the big question, where to now? Here's CommSec's Piotrowski.
So there's certainly more downward pressure in the pipe as far as the Aussie dollar is concerned on a number of counts. So the way that international investors will be viewing the Aussie dollar will be the headwinds that are being created by the slowdown in China, and hence the lower demand for commodities in general. We've seen other commodity economies go into recession, most recently the Canadian economy, so that's another factor that's working against the Aussie dollar.
And the other are interest rates. Today's GDP result may add to the case for an RBA official rate cut. And don't forget, the US is considering an interest rate rise, all of that weakening our currency.